Hey guys, Tiff with GammaEdge here coming at you for the post-market recap for August 21st, 2025. So after the trending moves to the downside we've got in the last couple of days, today was a inside day with a lot of that chopping corresponding with the bottom edge of our transition zone at 63.80. Right, and just quickly showing that here with our key levels. So 63.80, that was the bottom of the transition zone. 63.50 was kind of our key downside level today. We didn't quite get there, 2-3 points from the bottom, but close enough amongst friends, right? So with that, let's get into, reviewing our pre-market prep, specifically 0DT, on how we got those key levels, and then what our intraday tools were telling us about the trend, character, price action on the market based off of speculation and 0DT. Right, so as always, trading SPX 0DT, or really even if you're a swing trader, understanding the overall environment of where we at through the context of positioning in the options market, always starts with that SPX game plan. We go through SPX-A, SPX-P, full complex. Why? Because we want to understand how that kind of longer term, slower moving capital via the SPX-A is positioned. And then we want to also understand how the shorter term speculation via SPX-P, where those traders are speculating, how that is moving as well. And so kind of long story short, what we're seeing is, we've seen the deterioration of the SPX-P complex day over day starting this week, which we hadn't really seen previously to that. So from kind of more of a situational awareness, longer, multi-day, multi-week time frame, this is kind of a period of time where at least our foot has been off the gas pedal, especially when our 100% systematic strategy that has been turned off since last Friday, I believe, and that's all driven by our market trend model, right? So just something to keep in mind there. As we've been noting a couple of days now, we could be witnessing that flip of, kind of a call dominated market into a put dominated market. So it's something that we just want to keep monitoring day over day. And really, this is the SPXP dashboard. Quickly, again, not going to go through this all because we did a full YouTube live on this that we do every morning, so you guys can go watch that. But again, just seeing a lot of puts starting to come in below spot price. Right, so now specifically getting into SPX 0DTE, looking at that structure. So transition zones clearly outlined here, right? The DEX transition zone defines 6400, 6405. So right, that 6400 key Livermore level, downside transition level, probably an algo level. So something that we were just cognizant of in the pre-market. And then to the downside, bottom of our drunken sailor range was defined as 6380. Reason for that is, as you can see, we are rolling kind of down a hill, down a gradient. You can see once we get to 63.80, that is where the peak of open interest is. So that's going to require a good bit of volume to overcome that level and sustain that move lower. And then from there, you can see that we're continuing to roll down that gradient down to 63.50 is kind of that key natural level there. And then, right, same process to the upside. Obviously, we got a downside move today, so you guys can go read about kind of what the if-thens of the upside were, but keep in mind that those are there. We do if-thens every day for both upside and downside because, given the nature of SPX 0DT, it can whip around quite rapidly. But anyways, okay, getting back to, price action itself, this is just what I drew on the chart today just so I had those key levels. We had the DEX transition zone all the way up here, and then we had the bottom of our drunken sailor range, 63.80, and then kind of that downside target at 63.50. And so, right, we can see early in the session, a lot of price action within the transition zone itself, right, which is a no-no. Transition zone, tough to trade in an area of low pressure. So, intraday volume is really going to be driving that price action within those levels, or the lack of volume really just makes it a lot of Brownian motion. And so, yes, we did get a move down to 63.50, close enough, like I said, 2 or 3 points off that. But really, just stepping back, it was a large inside day from, prior day range. And just really range bound action. And one way that we did see that is first through the market trend model, looking at today's price action specifically. Yes, there was a little bit of a down move, but just looking at kind of where the significant activity was occurring, it was very flat on the day, both in terms of the cumulative tick and the filtered tick. Remember, the filtered tick is measurements of large buying and selling transactions. And those really just were not present today. So that chopping action kind of makes sense. And again, had a chance to go lower multiple times today, but we didn't see, that large selling kind of step on the acceleration there. Keep in mind though that for now, our market trend model signal for our long P transit plus GEX strategy is still turned off until we are able to move above the short-term moving average ribbon. And like I was saying in the midday YouTube live, important, to be glued in your seat if you're trading off these short-term signals from the market trend model, because, 10, 30 minutes of aggressive action higher, and we could be back in business in terms of the short-term trend moving higher again. But right now, given this consolidation action, I mean, that's all that is in the context of a longer-term uptrend. We are just consolidating right now. Again, if we start to see, the options market continue to deteriorate, as in those puts keep coming in, and then we really start to see a waterfall and a roll over under, then that would be a lot more concerning. And then the other key tool that we're monitoring on an intraday basis is our intraday volume analysis, specifically looking at SPX 0DT volume. Why 0DT? Because that makes up 50% or more of the daily options volume in the SPX, so it has a good deal of influence on price action. Specifically, what we're looking at here is we are inferring the behavior of speculators, both call speculators, which is the green side, and put speculators, which is the red side. More specifically, what we're doing is on a 5-minute over 5-minute basis, we are aggregating the call and put volumes separately. We are, displaying the distribution, finding the middle point of that distribution, which is called a centroid, and we are plotting that. And so every 5 minutes, we're plotting those centroids, and over time, we start to get a good trend or a good feel for what the behavior of speculators are doing, both above and below spot price. And by knowing that, we know what the character of that speculation and the character of price action is for the day. So either chopping, trending higher, or trending lower. And then we also get a feeling for where price could be headed throughout the remainder of the session. Because all things equal, if we know what speculators have been doing, we can project out in time what they are going to do. And that's exactly what this chart tells us. Keep in mind, this is the end of the day chart. We will go to a middle of the day chart so you can better understand how that looks. But always like to start at the end of the day, right? Because athletes, sports teams, they always watch game film to see how they can improve. So we should be doing the same as traders. And so, right, again, there was a choppy signature, right? Call or put speculation was moving sideways to higher throughout the session. Call speculation was moving lower to sideways throughout the session. And so that is just a classic kind of converging, and hence you get this choppy price action when it's really characterized by you start to think that you're getting a move either higher, starting to get a move lower, and then it just snaps back into the middle of the range. And again, all this price action centered around 63.80, which was the bottom of our transition zone. And so, right, even early in the session, this was at 11:25 Eastern Standard Time. We could see that, easily from here that this was a choppy signature, choppy price action, right? Calls moving lower, puts moving higher. Yes, I know that these are converging, but, as you watch these more and more, you will start to understand that as you get more and more data points, these will start to converge, and they're never like converging at the end of the day, right? They whittle themselves out, and we can just go through examples right now so you can see how that kind of plays out over time. But again, here you see, right, this is at 1:15 in the afternoon, and again, clearly see just that same character, same behavior is happening, right? So on the call side, assuming all things equal, we can project out something like that's going to happen. Same thing on the put side, something like that's going to happen. Right, and this was an interesting point in time of the market. This is actually when we were talking on YouTube Live on the midday, how we could see that, put speculation was starting to move lower. We were at 63.58, so kind of the downside target we were talking about at that point in time was 63.80, which we said if we were to get then, that's kind of our key downside level for the day. So shorting at that point in time was not great risk to reward because you're already so far in the hole, and you're at kind of a key downside monetization level, quite extended from the transition zone. So think of the rubber band as being stretched. So again, that's just kind of how we were thinking through in real time, using the tools, creating that mosaic approach of understanding where those kind of key risk to reward optimal trades are, if there even was an optimal trade. And so people were asking at that time, like, okay, is 63.50 where we should be getting long? And my response was, not necessarily. I wouldn't think in absolutes like that, but what I would want to see is, kind of a clear respect for that level, and then some kind of, material push higher. Because especially given just the signature of what this looks like, if we do start to get that turnaround and move higher, then it's likely that is going to continue at least kind of into the middle of the range, and that further meltdown lower has less probability of happening. And that is exactly what happened, right? This was a time period that I was talking about here. So anyways, neither here nor there, just kind of a representation of how I was thinking about it, how we could use the tools. And yes, I mean, right, classic chop day. I know folks in the community were talking about, putting butterflies on, whatnot. Those were posted, so feel free to go review those. And yeah, that's all I got for you guys tonight. The goal of the video was A, to kind of show you how we review pre-market structure to get those key structural levels, because right, structure is the structure, that's not going to change. And then once that bell rings, how we confirm those key structural levels through the intraday volume analysis and the market trend model. And with that, we appreciate your time. And yeah, tomorrow's Friday, so we'll be back at it then. Thank you. Bye.